Hello and welcome to the latest edition of bondIT Insights in 10. The topic of today's session is transforming fixed income investment strategies with AI-powered precision. And let me start by introducing the team. We have a special guest with us today. Welcome to Alex Serman, Managing Director, Wealth and Institutional at First Rate. And also with us today is my colleague, Andrew Merrill, who heads up North America sales at bondIT. First Rate and bondIT, we recently decided to team up because together we can create added value for our wealth management clients and help them improve their credit risk analysis and reporting by using the latest technologies. So we thought, this LinkedIn session would be a great opportunity to tell you a little bit more about our collaboration, why we decided to partner up, and how this benefits our clients. So let's take a look at the market first. Because ultimately, we're always driven by what our clients need and how we can help them solve some of the challenges that they're facing. So if you look at today's wealth management industry, we're seeing, the industry is undergoing a great shift and wealth managers are facing multiple challenges. So for once, there's the generational change. Wealth managers not only have to compete to retain assets from existing clients, but they also have to adapt their services for new, younger clients who are more digitally savvy, have their own unique expectations. Then another challenge that comes from the pressure on margin. We see, more demand for self-services and demand for cheaper, less advice-dependent products. And all those are obviously kind of putting pressure on the margins of traditional wealth advisors. Another issue is the increasing regulatory complexity. Access to financial data and more client data can help wealth managers to improve their services, but obviously advisors must balance this increasingly strict regulatory demands and also with the need to reduce fees, enhance transparency. So there are both challenges and opportunities in this space. We see intensifying competition. So we have the traditional firms on the one hand, kind of new propositions to retain clients and gain new clients, but they all have to compete with, the new kids on the block, the new, more modern digital wealth managers. And we're certainly seeing a shift in landscape and the demand for more, innovative products and approaches. And last but not least, there are challenges, stemming from the digital transformation and the obstacles that managers are often facing internally. So we see legacy technologies, we see inconsistent strategies to introduce change, and obviously, also internal resistance to make changes and shift to a more modern and digital approach. And all this causes obstacles. But I think it's fair to say that wealth managers who want to stay relevant and competitive, they will have to adapt and innovate. And with that, let me head over to Alex, who will talk a little bit more about how technology can help tackle some of those challenges.
Excellent. Thank you, Kirsten. And so there are a lot of different solutions that can be provided through technology. And so some of these things include empower transparency. And so with wealth advisors utilizing the latest and greatest in technology, they're able to maintain transparency in what they're doing, how they're doing it, and building that trust between themselves and their clients. So that way it's not just some black box that they're working in, but it's very clear how the data is being utilized and just makes clients feel more trusting in their advisors on how they're managing their money. And with continuous innovations, there's constantly new firms starting up, new technologies coming out to the market. And so those types of wealth managers that are staying ahead and being competitive by utilizing these new technologies are going to be able to more proactively meet customer demands and not just be as reactive as many in the wealth management industry are. And so this also increases efficiency. And so being able to use technology to streamline those manual processes that you're doing, this allows you to save time and focus on your real value add things that you're doing rather than doing things that aren't actually adding value, and allow you to really continue to build that relationship with your customers rather than focusing on back office processes. And Compliance is another area in which technology is really advancing. So with reg tech, with other things in that field, being able to integrate technology to just simplify regulatory processes, being able to report more accurately, take out some of that human error that occurs when you're trying to fill out these compliance things manually. This really helps reduce your risk and allows you to, again, focus on more value add items than just on compliance. And then just clarity in data. So being able to use AI to make sure that you have data from a number of different sources, having that holistically in one place where it's organized, it makes sense, and you're able to clearly identify trends and patterns within data that allow you to make more informed decisions. And that leads right into predictive intelligence. So again, utilizing AI to and analyze large data sets, being able to find those trends and those patterns that the human eye wouldn't necessarily be able to pick out easily, but AI is able to. And so again, allowing you to make more informed business decisions based on this data. And so not having AI make decisions for you, but enabling you to be a better decision maker.
Thanks, Alex. And I'll pick up from here and highlight some of the key attributes of the explainable AI that bondIT is offering. We allow you to make better informed investment decisions faster, which then provides you the chance to outperform your peers, specifically by anticipating rating changes ahead of the agencies and markets and capturing that outperformance and avoiding the downside. We allow you to understand the drivers behind the predictions and decisions. Our explainable AI offers that to you for each of our issuers. Our issuers are covering over 95% of the corporate bond universe, and you can both broaden your research capabilities and efficiently manage your exposures using our explainable AI, which we'll demo to you in just a moment. I'll turn it back over to Alex.
Yep. And First Rates has partnered with bondIT to utilize their explainable AI in these bond rating predictions and incorporating that into our reporting platform. And so First Rate is able to aggregate large and difficult to manage data sets from a number of different custodians. So we're able to take all that information, aggregate it, normalize it, and reconcile it to then calculate performance on that. So being able to identify what are the trends in performance, how are your investments doing, and then effectively communicate that back to the client and help with that investment story narrative. So that way you're able to, again, build trust with your clients and with partnering with bondIT, being able to outperform your peers and show that value that you're adding in the fixed income space and be able to really quickly and easily report on that, be able to make changes on the fly, utilizing First Rate's reporting technology to tell that specific investment story to your client and really continue to build that relationship with them.
Excellent. And now let me show a quick demo of our scoreable technology, which is offered through the Core 2.0 platform. And please, anytime after the presentation, reach out to ourselves or Alex and the First Rate team. And we are eager to show you a deep dive demo and discuss the technology. What you're looking at here is the heart of the scoreable platform, where for AT&T and 3,000 other issuers representing over 95% of the corporate bond universe, we're providing downgrade and upgrade probabilities over the coming year, matched with relative value at the currency, sector, and ratings bucket level. We see for AT&T that the scoreable rating transition class is negative with 18% downgrade probability over the coming year. And it's also trading very rich, which will tie into our smart list, which we'll show in just a moment. But really nicely for each of the issuers on the platform, we show the credit history from the end of the training period, which was 20 years between 1995 and 2015 to present day, which you're seeing for AT&T here. And you can see the downgrade probability in recent months has ticked upward starting around January. This is key for any advisor, portfolio manager, or anyone holding AT&T bonds to be aware of. And we offer the explainable AI with a deep dive into the impact of features at both the cluster level, which we can sort here by impact on downgrade probability, and at the individual feature level, which we can open up for any of the clusters. There's 250 features that are utilized in the AI that Scoreball's offering. And as I highlighted, we also offer users daily smart lists, including buy and sell opportunities, where you can watch your particular issuers, get alerted on them, and take proactive measures using our explainable AI. And I'll turn it back over to Kirsten and Alex.
Yeah, thank you very much, Andrew and Alex, and thanks to all our viewers for joining us today. As Andrew already said, if you want to find out more, if you're interested in a demo, reach out to us. Feel free to contact Andrew or Alex. You have their email contacts here. Reach out to us via our websites or via our LinkedIn, and we'd be happy to tell you more. Thank you very much, and have a great day. Thank you.